Today, a group of crypto lobbyists sues the SEC. The Philippines tells Apple and Google to remove Binance from their app stores. And Adam Sullivan of Core Scientific breaks down what's next for the miner after the latest Bitcoin halving. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrencies holding steady this morning with Bitcoin hovering right around $66,400. Ether, meanwhile, rising to $32.25 and Uniswap trading at about $8. Let's talk about the top stories. A group of crypto lobbyists is suing the SEC over an update to its rules regarding dealers. Back in February, the agency adopted rules that added significant market participants to the definition of dealers, which falls under the purview of the regulator. Well, on Tuesday, the Crypto Freedom Alliance of Texas and the Blockchain Association filed suit against the SEC and Chairman Gary Gensler in federal court, saying the agency's newly expanded definition of a dealer goes too far. They argue it could encompass people participating in digital assets that don't engage in conduct that resembles dealing. Now, we reached out to the SEC about this lawsuit, and a spokesperson said the commission undertakes rulemaking consistent with its authorities and laws governing the administrative process and will vigorously defend the final dealer rules in court. At the same time, two lawyers with the SEC have reportedly resigned after a federal judge sanctioned the regulator for gross abuse of power in a crypto lawsuit. We reached out to the SEC about this story too, and a spokesperson said the agency doesn't comment on personnel matters. Next, Venezuelan oil company PDVSA reportedly wants to use Tether to skirt U.S. sanctions. According to Reuters, as the Biden administration reinstates a Venezuelan oil ban, the company is looking to the largest stablecoin by market cap, Tether, to minimize risk of freezing accounts. Last week, the country's oil minister, Pedro Tellechea, told Reuters that digital currencies might be the preferred method of payment for some oil contracts. Tether told CNBC that it respects the sanctions list and is committed to freezing sanctioned addresses. We also reached out to the Department of Treasury but didn't hear back right away. Yesterday, the Department of Justice unsealed an unrelated indictment charging individuals from the Venezuelan-run oil company alleging evasion of U.S. sanctions in 2019. And finally, the Philippines Securities and Exchange Commission is ordering for the removal of Binance from app stores. The regulator announced it sent notices to both Google and Apple requesting the removal of the crypto trading app. The requests emphasize the believed threat Binance poses to Filipino investors and that it operates in the country as an unregistered securities broker. CNBC reached out to Binance, Apple, and Google, but didn't immediately hear back. The regulator warned of blocking Binance back in November. The same month, the exchange reached a monumental settlement with the U.S. DOJ that included the resignation of founder and then CEO Changpeng Zhao. All right, for our main story, we're still watching crypto markets and miners after the fourth halving for the network last Friday. I spoke with Adam Sullivan, CEO of Core Scientific, about how the publicly traded miner prepared for this latest halving event and what's next for the company. Well, thank you so much for joining us. We just had Bitcoin's fourth halving, and it came just months after your company exited bankruptcy, relisted on the NASDAQ, and then just recently announced an expansion of your facility in Denton, Texas. What is your strategy after this most recent halving? And is the expansion in Texas part of that strategy in the face of smaller block rewards?
Yeah, so Bitcoin creates abundant energy by its very nature. And so what we look to do, and the approach that we took from the very beginning, was to find low-cost stranded energy in locations that were also viable for other use cases. What you saw with our expansion in Denton, Texas, is that we not only believe that ERCOT and the Texas market more broadly is a very strong market, not only for Bitcoin mining, but also for potentially other use cases as well. So we're definitely focused on continuing to build out our Bitcoin mining footprint over the course of the next few years. But we're also going to look to continue to expand into other business lines as a way to monetize our asset base in the best way possible.
We saw Bitcoin transaction fees surge immediately after the halving, and then they came right back down just as quickly. Are you hopeful that transaction fees will continue to climb and supplement that lost mining revenue, especially with things like ordinals? And what could drive that? Since, last year we saw that big spike, another similar spike recently, and it's not just that big spike and then it continues. So what could start to bring that trend back?
Yeah, what we're seeing right now is the runes really in the post-halving world has been almost 50% of the transactions that occurred directly after the halving. Obviously supporting Bitcoin miners, Bitcoin miners, we love to see transaction fees higher on the network. And so from our perspective, we're very supportive of any projects that are developing directly on the layer one and are transacting actually on Bitcoin. So from our perspective, we obviously applaud the Runes launch. And I think going forward, it's something that we can't expect to see, right? We can't expect to see transaction fees stay this high for an extended period of time. When you look back throughout the course of the Bitcoin network, you see blips, maybe they last as long as a month in terms of higher transaction fees, but transaction fees will come back down. And that's going to have a major effect on the Bitcoin network, because what we've seen is profitability stay high enough where not many machines have actually come offline. And so we expect to see over the course of the next 1 to 2 months, we'll start to see that normalize as transaction fees start to come back down. And then the profitability also comes down with it. And that's going to remove a lot of the older generation equipment and some higher power cost sites from actually being able to participate in the network.
Crypto World's Mackenzie Sagalos reported on miners potentially turning to AI to brace for slashed revenue from mining. Is that something Core would consider given the boom in AI right now?
Absolutely. What we like to do is maximize the value of our asset base. Our asset base has access to low cost and a lot of megawatts at each of our sites. So all of our sites are really ideal for also hosting HPC from the perspective of many of our locations are located next to major metropolitan markets, meaning they'll have low latency, which is a requirement as part of HPC and AI. And so we announced our first deal earlier this year with CoreWeave, and we're going to continue to explore any way that we can maximize the value of our assets. Today, that looks like it's AI, as the demand for AI is extraordinarily strong, but we're going to continue to evaluate more opportunities down the road in any way that we can maximize the value of our asset base.
What are the plans for Core specifically this year as you look to continue your comeback in 2024?
Yeah, our comeback's been strong. We emerged earlier this year, and we're continuing to grow. We announced our first expansion of 72 megawatts, just extending our infrastructure lead on the industry. And we're going to continue to refresh our machines over the course of 2024 to not only increase our exahash exposure, but also increase our margin profile. So it's about protecting our existing asset base. And Bitcoin has been a very profitable enterprise for us over the course of the past 7 years since we entered this industry. And as part of this, we're also adding on a kind of a secondary component to this, which is continuing to evaluate our asset base. And that's why we've been talking a lot publicly about we're evaluating different potential contracts on the AI side, because it's tremendous value. It brings stable free cash flow to an industry right now where Bitcoin miners are faced with high volatility. And so figuring out ways to make our revenue streams, our free cash flow streams, much more stable and much more easily to project, 5 years, 10 years down the road, that's going to add value to the base of our business right now, which is Bitcoin mining.
Turning to Bitcoin itself, what is your outlook for the asset this year more broadly? The big catalysts seem to be here already. We've had the spot ETFs, we've had the halving. So what's next, and what are you tracking when you watch the price of Bitcoin?
Yeah, I think the big question is whether the ETFs were the launching pad for allowing Bitcoin to rally post-halving, or whether we saw that rally pre-halving. There's still some catalysts on the horizon. When you look back at previous halvings, the time period at which Bitcoin rallied post-halving has elongated over time. And so you'd expect to see that most likely in kind of the 6 to 9 month time period, just based on looking at that trend elongating over time. And then we also have some other catalysts as well, such as the Hong Kong ETF, which I think will provide some tailwinds to Bitcoin price over the course of 2024.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.